Time now for Options Corner. Joining us to take a deeper look at the chart is Rick Ducat, lead market technician. So yeah, that is one of the things that stands out to me, Rick, how Akamai has managed to avoid what they've dubbed the SaaS apocalypse. But what trends do you notice in the chart for Akamai?
Yeah, that's a really good point. A chart that looks really quite different from the rest of this sector here, as you can see on our comparison that we have set up showing how Akamai has performed relative to the XLK technology ETF and the S&P. So still underperforming though, but doing a heck of a lot better than a lot of what you'll see in the software sector lately here. So now if you look kind of at some other competitors in this space, these other names mostly have seen more of a downward trajectory since the start of this year here. Even the outperformer Cloudflare not doing quite as well either here. So to move on though to Akamai more specifically, when we look at our candle chart, what we see is a very sharp push to the upside that's taken us above our previous old highs near 105. That's our green line there. Our intraday highs came in at 113.50. So those are kind of the short-term boundaries to watch. This is one of those situations where, due to the fast-moving prices, we don't have a lot of good horizontal support and resistance areas that have been established in the near-term action here. So for now, kind of the best we have is our very sharp, very steep upward sloping trend line in white there. You can see our blue trend line that's more moderately sloping has been kind of left in the dust at this point here. After we established a bit of a baseline near 91, you can see that was where we hit highs a few times here. But then after the breakout, that's the point to which we were treated here. So the old resistance became new support, a very common situation you see in trading. So to look at our next chart that we have set up here, our moving averages, prices above all of them, they're diverging farther apart from each other. The closest one is our dark blue weekly 5-day EMA near about 106. So that also lines up with our trend line. So that could be an interesting potential breakdown point to be on the lookout for if things do start to go awry with this earnings announcement that we have scheduled for today. So our next thing we're going to look at here is volume profile. So again, due to the fast climb that we've seen in share prices, we don't have a lot of good heavy volume nodes here. The best we can do kind of around 102 to 105, matching up with our previous highs. The real significant node is all the way back down between 86 to 90, and then even below that, the point of control near 77, very far away from our current price activity at this time. You can see also several volume spikes that we've seen recently, indicating heavy trading activity and high conviction on the part of traders during this climb to the upside, Diane.
Okay, what's the approach you would take for an example trade in the context? One, we've got earnings in front of us, and also it's had this strong run and managed to avoid the SaaS apocalypse. What's the approach you're taking, Rick?
Yeah, for sure. So if we look at our next chart, kind of the expected move landscape for the next 29 days or so, March 20th expiration, plus or minus about 16% or so. So a decently wide range for that time. If we were to kind of overlay everything on each other now, you can see the lower edge of that boundary lines up with some of our old support and one of our moving averages, and roughly, kind of around where we would have our volume node as well. So using that as kind of our guideline here, the trading question we could do would be a short put vertical, hoping to stay above that level. -1 March 20th, 95.90, put vertical at a 120 credit here. So 120 credit is our max profit here. Max loss would be 380. So roughly 1 to 3 for that risk reward that's commonly looked for in trading. This is for this example trade here. Our break even 93.80, about 13% to the downside versus our expected move of roughly 16%. So it would be encompassed within that range here, but kind of at the end of the range there. So we would need a move about at the edge of what's expected for this trade to not work out in our favor in this situation here over the next 29 days or so. And this is more of a soft target. This is something where we just want it to stay above that break-even price in order to keep that credit received here. We go on our merry way if things go up, and it just, we keep our credit, expires worthless. If it does start to go down, you could also just manage it. You could close it out before it expires and not try to deal with the pain that could come if it does start to go against your outlook here.
Okay. All right. Thank you, Rick. Appreciate that. That's Rick Ducat, our lead market technician.